Okay, no problem. I hope you're all well. Thank you all for attending this month's webinar for FX Street. Summer, of course, we're in, what we're in now, we're in August, right? 5th of August. So, bang in the middle of summer, really. So, the markets really reflect that. The regular guys to this webinar will know that my approach to the markets is very much a longer term approach. Okay, so we're going to looking at the bigger picture, monthly, weekly, daily timeframes. And when we look at the bigger picture, what you'll start appreciating and recognizing and understanding with time and experience that there is a rhythm to the market. So there are trends at certain times of the year, and then certain times of the year the markets go quiet. The summer period is a typical time when the markets go very quiet. And that is because the market makers are on holiday. Everyone deserves a holiday, and the market makers are no different, okay? So sort of June, July, August, we can see times, we can see very much range-bound activity. And then come the end of summer, so August, beginning of September, this is when we'll start seeing the markets come back alive again. So what really happens during this time is that trend traders like myself, we tend to stand aside. Now, we have positions running, so part and parcel of today's presentation is looking at the currencies and the trades that I have running, but also how I'm simply holding onto those positions. I'm not taking any new trades at the moment, and how when the breakouts occur, this is when I'll start looking to compound or add further positions or scale in, as some of the terms that are thrown about. If I'm not in any trades, then how am I going to look to enter those trades? Okay, so this is what we're going to be looking at in today's presentation. So what you can see in front of you is a typical chart setup of mine. Okay, top left corner, you can see is the watch list. Okay, so I've got a 4-screen setup here. Top left corner, I've got the watch list. Now notice it's an extensive watch list. Aussie dollar, US dollar, all the way down to the South African rand, Japanese yen. Okay, so I'm looking at the bigger picture in terms of a portfolio. Okay, a lot of people just focus on a few currencies like the majors, maybe even just like one or two, like the euro dollar or gold. But as a trend trader, I look at every single instrument. Now, I'm not, something to remember is that doesn't mean that I'm looking and analyzing every currency every single day of the week. I'm not doing that. At certain times of the year, only certain currencies are trading. So what you'll notice in the currencies that I've got currently on my that I've got positions open on, that there's a theme to them. Okay, that they're all sort of correlated in some way. All right, top right corner, I have the monthly time frame. Now, if I open up the monthly chart, you notice I'll have a tool. This is a proprietary tool, and this highlights the major areas of support and resistance. Okay, what the mistake that is they go down to a lower time frame, maybe the 1 hour, 15-minute, 4 hour, and obviously the lower time frame you go, the more candlesticks you're dealing with. The more candlesticks you're dealing with, the more intraday noise, the more support and resistance levels. Okay, if you look at the bigger picture, you can see quite clearly there's trends. So if you take from this low point here, 2001 to 2004, quite clear trend. So all of those support and resistance levels on the lower time frames were two grey squares on the right. Okay, I think I know what it is. It's the chat box. Okay, let me know if they've disappeared. So if I do that, so has that reappeared? Is there one grey screen? Yeah, okay, so that's the chat box. So if I move this over to this side, is everything okay? Okay, fantastic. All right, thanks, Adi. Yeah, Sandy. Okay, fantastic. All right. Okay, thank you. Okay, so what you guys can see is a proprietary tool, and this highlights very clear areas of support and resistance. Guys, look at the trend. 2001 to 2004, trend. Then we had a bit of a correction, a bit of a consolidation, and then 2006 to 2008, another trend. Then we had the trend, which of course was a crash in the 2008. But then look in the opposite direction. 2008 to 2010, another trend, correction, another trend, consolidation, another trend. So if you look at the bigger picture, you can quite clearly see clear trends. And all of those intraday support and resistance levels don't really mean anything. Okay. Now, also, if you'll notice I have these pink lines. The pink lines represent the highest point, the lowest point, and the closing point of the previous year. So in this case, it's 2014. Again, these are proven areas of support and resistance. If I just expand the chart, you will see how, if we take this green bar here, we had moved to the upside, price found resistance, it tried again, price found resistance, price came back down, and we've seen further weakness in the direction of the long-term trend. So you can see quite clearly how price reacts with these resistance levels, these support and resistance levels. So that's the highest price, the closing price, and the lowest price of 2014. Now, see, this is the thing. I have a tool. You can see now that I have a proprietary tool that automatically plots these levels for me. So if I went into the back end of my chart, and if I uncheck this button here, you'll see that instantly all the highs, the lows, and close of previous years instantly appear on the screen. Can you guys see that clearly? Can I get a quick yes that you guys can see all the new pink line levels? Yeah, okay, fantastic. Now, see, this is what happens. If you're using a free source software like MetaTrader or a software that a broker gives you, you have to do this manually. And you have to do this manually on every single currency that you're looking at. Okay, so okay, I've got a message saying sorry, having tech problems. Guys, can you see my screen and my? Can you hear me? Okay, I think that just might be local to Pan. Yeah. Okay. Fantastic. Yeah. Okay. I think that Pan on fire. I think that's just local to you. Yeah. Okay. Right. So you can see quite clearly how, what was I saying? Right, the pink line levels, how the software automatically plots these for me. So if you've got free source software where the software doesn't remove the manual labor, you then end up doing everything yourself. And if you end up doing everything manually on every single currency, that's very time consuming. And because that ends up being time consuming, people reduce their portfolio. And they think, wow, I can't do that on 50, 60 pairs, so I'm just going to focus on the majors. Okay, that is a fundamental error. That is a fundamental error because the major currencies are not always trending. And we'll have a look at that. We'll have a look at that today. The major currencies aren't always trending. So if they're not trending, that means the trends are somewhere else. So having good software is essential. Okay, so I'm just going to go back into the back end of my software, and I'm going to uncheck that because I like to keep my screens very clean. I only look at the previous year's highs, low, and closing price. Okay. Go to the weekly time frame. Now what you'll notice, I've got the weekly 200 moving average. The weekly 200 moving average gives me a bias. So when price is above, that's a bull market. When price is below, that's a bear market. What does that mean? That means that when price is above the 200 moving average, I only want to buy. I don't sell. And when price is below the 200 moving average, I only sell, I don't buy. Now, to also aid in that decision, I have a trend filter. If you notice, I don't have those bog standard red and green candles. I just have periods of green and periods of red. So now I'm going to put the two things together. When price is above the weekly 200 moving average, I want the green trend filter. And when price is below the weekly 200 moving average, I want the red trend filter. I ignore the red trend filter above, and I ignore the green trend filter below the 200 moving average. Now, I have that same logic on the daily time frame. So when price is below the daily 200 moving average, it's a bear market and I want to sell. And when price is above the 200 moving average, it's a bull market and I want to buy. And I also have that trend filter giving me areas of bullish and bearish trend. Now what I'm going to do is put the three things together. The monthly gives me very clear areas of support and resistance. Very clear areas of support and resistance. So I'm looking to trade between those levels. And I'm also looking for support and resistance levels to be broken when price is in a trend. It's a very fundamental point. What happens is that price may go to a major support level and suddenly everyone's looking to buy. What I'm looking to do is wait for that support level to be broken and to continue going short because the long-term trend is down. Okay, so I don't necessarily look to go long off support and short of resistance. I'm looking for levels to be broken in a trend. This is a very crucial point. Now, once I've established areas of support and resistance, I then look at the weekly time frame and the daily time frame in unison to give me a trend and bias direction. So I want price to be below the weekly 200 moving average and the daily 200 moving average. And I want the trend filter to be red on the weekly and the trend filter to be red on the daily in a bear market. And in a bull market, so if I bring an example of a bull market, let's have a look at the Swedish krona. I was looking for my support and resistance areas on the monthly, but also on the weekly, I'm looking for price to be above the weekly 200 moving average and the trend filter to be green. And the daily time frame, I want price to be above the daily 200 moving average and the trend filter to also be green. Okay, I'm going to quickly go to the chat box. I know that was quite an extensive explanation, but it's very important that you guys understand my screen setup to understand how I'm going to do my analysis going forward. So just in the chat box, guys, could you give me a quick thumbs up that you understood that, please? Yeah? Okay. Okay, so there's a few yeses coming through and some via private message as well. So, okay, I'm understanding that you guys understood that. Right, now, because you guys have given me the thumbs up, let's go in and do some in-depth analysis, okay? And what we'll do is we'll start with the monthly, go down to the weekly, go down to the daily, and then on the daily time frame, we'll establish entry points, okay? And we'll also look at where I found entries on previous trade, okay? Okay, so starting on the monthly time frame, long-term trend is down. We can see that the long-term trend has been down going back to 2013. Trend, consolidation, trend. Now remember, the longer the consolidation, if you guys, the guys who've been following me since last year, should no doubt be very aware of the Aussie dollar, US dollar, because one of the times we were doing back in 2014 when I was doing webinars for FX Street. Price was stuck in this area of consolidation. Price was stuck here. And I mentioned that if price breaks out to the downside, so if price breaks this support level, we should expect it to move. And where should we expect it to move towards? Well, I tend to use round numbers. So once it broke this consolidation and broke this support, I'd want price to move to 0.8, 0.7, 0.6, and 0.5. These are my levels. I keep things very simple and I use round numbers. Now, if we actually look at the structure of the trend, look at the highest point, round number 1.10. Look at this pivot level here, round number 1. If you look at this whole support level, resistance support level here, 0.8. If you look at this level here, 0.6. If you look at the lowest point, 0.5. Guys, can you see, can I get a quick yes, please, that you guys can see how price reacts to round numbers? A quick yes in the chat box. Yeah, okay, fantastic. Round numbers are fundamental. They are fundamental to trading. They're psychological areas where price likes to move towards and where price could potentially bounce to the upside. But if it's in a trend, it will break and move to the next round number. Okay, so let's see what's happened. Going back to last year when we got the breakout, price moved to 0.8. We can see that it moved to 0.8. Consolidation around 0.8. Now where is it moving towards? 0.7. If it clears 0.7, 0.6, 0.5. Okay? Now someone's just asked me, how do I establish a trend? This is what I'm explaining. If you guys are absorbing what I'm saying to you, I'm explaining to you how I establish the start of the trend. This is the analysis of what I do week in, week out. Okay? Now go to the weekly time frame. Price is trading below the weekly 200 moving average. The trend filter is red, suggesting that the trend is down. And if I go to the daily time frame, price is trading below the daily 200 moving average and the trend filter is red. Everything is suggesting weakness. Quick question to the chat group. If price breaks this support level, so let me just get this tool. Okay, if price breaks this support level right here, I'm going to draw this in. Okay, if price breaks this support level, is this an entry point? Yes or no? Okay, right, we've got two people saying yes and one person saying no. Okay, okay, third person sitting on the and fourth person sitting on the bench. Okay, Stephen, yes, quite definitive. Okay, remember, guys, I am a trend trader. I am a trend trader, so I'm looking for breakouts in the direction of the trend. If price breaks this low point, for me as a trend trader, this is an entry point because a new low point means a continuation of the trend. What most people are doing is seeing indecision here. So they're looking at this doji and this spinning top, and they're thinking, right, here is some kind of support level. I'm going to go long. This is a very short-lived way of trading. The reason for that is because you're continuously trying to predict the bottom of a trend. Now look at this trend. How many times did people try and predict the bottom of a trend and were wrong? The overall direction of the trend is quite clearly down. Okay, so if price breaks this support level, this is an entry point. Now, I've already got a position running. I've got a position running since price broke out of this consolidation. So if we look here, okay, price broke out of this long-term consolidation. We had weakness to the downside. I've got a position running already. When price breaks this low point, this is when I'm going to start compounding or scaling in or adding new positions. I like trading breakouts. Breakouts are far more, what's the word I'm looking for? Are far more consistent, are far more powerful than pullbacks. Everyone's obsessed with pullbacks because they're thinking they're getting in early. But how do you know if it's a pullback? How do you know it's not a trend reversal? How do you know you're not going to get caught up in some kind of consolidation area? Pullbacks are a good entry point if you understand price action and if you know how to read pullbacks. And that requires experience. For those people who aren't so experienced and are looking to get into trading and are, practicing maybe, what you want to be focusing on is breakouts. Look how many times this trend broke out, right? There's a trend, it broke out here. Trend, broke out again. Trend, okay, here it broke out but went into consolidation. But it's broken out again in the direction of the trend. There is a very good chance this is going to break out. Now, because it's August, it may stay within this resistance and support level for the next few weeks until September comes, and then we should see weakness to the downside. That is what price is telling me. That's not what I'm predicting or what I'm hoping. That is what the analysis is telling me. If price breaks the daily 200 moving average and it breaks 0.80 and it starts breaking resistance levels, that's when we're in a trend reversal. For now, this is nothing more than a breather area. And if you look at the actual structure of the trend, consolidation, trend, consolidation, trend, consolidation, trend. It's not doing anything different. Okay, guys, clear? Can I get a quick thumbs up? Because moving forward, I'm going to be a little bit faster with my analysis. Was that good? Entry point, since you have been open position, correct? Clear, fantastic. Entry point, since you have open position, correct? I don't understand the question. Could you please rephrase that question? JSW. Okay, thank you, Stephen. Thank you, Adi. Okay, I'll wait for your question to come through, and I'll just move on to the next bit of analysis that I'm going to do. Now, I'm going to only look at a few currencies. Okay, I'm only going to look at a few currencies, and these are the currencies that are in trend. As we looked at the Aussie dollar, I'm going to go straight to the New Zealand dollar. Now, Aussie dollar and the New Zealand dollar, they do similar things based on geographical location. So because the Aussie dollar, as we've seen, is in a downtrend, we should expect the New Zealand dollar, US dollar should also be in a downtrend. Okay, and what do we have on the monthly chart? We have price quite clearly in a downtrend. Guys, look how quickly price is moving. It went through this area of consolidation. 1, 2, 3. We're now in the fourth month of weakness. Where I'd like to see price move towards is 0.6 and 0.5. If it breaks 0.5, even 0.4, because price has been that low. So there is potential for about 2,500 pips for this trend to develop. Okay, if we go to the daily time frame, the weekly time frame, price is trading below the weekly 200 moving average, and the trend filter is red, suggesting weakness. And if we go to the daily time frame, price is trading below the daily 200 moving average, and the trend filter is red, suggesting further weakness. Now, I had a discussion on social media last week with someone who started panicking because price was moving against him on the New Zealand dollar. Guys, look at what's happened this week. Price simply corrected. We had almost like a double top formation, if you like, a 1, 2, 3. If it breaks this support level, that will confirm the chart pattern, and we should see further weakness. Remember, a double top in a downtrend is a continuation pattern. Okay, remember that. That's crucial. A double top in a downtrend is a continuation pattern. So if it breaks this level here, this will continue. This will suggest a continuation of the trend. There is nothing to suggest that price is reversing. I've got positions. I've got multiple positions running since price broke 0.70. As soon as price breaks this level, I'm going to start adding further positions. Okay, I'm just going to go to a chat box so I can see a few questions. Without confirmation, who's to say your breakout at support level is not a fake out? Okay, that's a good point. That's a good point. Now, how do I, and I'm going to put this to the group. How do I try and eliminate fake breakouts? What do I do? Any ideas? It's very simple, guys. I wait for a break and a close. I don't go in on just a break. What happens is that because people have drawn in, and yeah, that's a good one. I can wait for a break. I can wait for a retest of that level. Okay. So if, for example, let me just get my support and resistance tool. Okay. So if I draw in the support level, we can see prices coming to this support level. Now, of course, there's several scenarios that can happen, but as a trend trader, my bias is in the direction of the trend. And as the trend is down, I want to see further weakness. Okay, so what I'm looking for is for a breakout. Okay, and when price breaks this level, that's my confirmation, but not just a break. I want a break and close. So say, for example, today's bar. So just suppose we have a good weakness to the downside in the next few hours. 11 o'clock UK time, I want this bar to close below this level. If it spikes below and reverses back up and closes above, this is still support. That's a fake breakout. I'll wait for the next bar to break the low of not this, but the low of the spike. I'm waiting for a break and a close of support or resistance levels to confirm a trend continuation. Now, if it's a very lengthy consolidation, I may not take the first breakout. I may wait for a retest and then the next breakout. But if it's a mini consolidation like this, I'll take the first breakout. And this is when I'll start adding further risk to the trades that are already running. Guys, this is what Warren Buffett does. Believe it or not, I know he's a value investor. And, I know he's a value investor. And he uses fundamentals. But his whole approach of accelerating profit is done through compounding. The turtle traders did it. John W. Henry, George Soros, Jim Rogers, all the big investors, they've all done the same thing, which is when they're in a winning trade or a winning investment, they want to add to accelerate profit. Okay, guys, did you guys absorb that information? Did that make sense? Can I get a quick thumbs up, please? Thank you. Okay. Thank you. I know I'm quite thorough with my answers, so I hope I'm not sort of losing people. But, it's really, really important that people embrace the sort of natural rhythm to price. It's really, really, really important. What most people are doing is getting caught up in this intraday noise. Guys, okay, I'll give you a good example. Friday. What's coming out on Friday, guys? First Friday of the month. What news item comes out on Friday? Right, exactly. Thank you, Stephen. And the whole of the private world, it's all getting excited and all getting, rallied up for NFP because they're hoping to catch a few pips and make it rich. It's for me, my computer has been closed pretty much all week because it's summer. There's nothing much to be doing. And secondly, with NFP, the way I attack NFP is I keep my computer closed from Wednesday. So Wednesday, Thursday, Friday, no trading. Monday, back to normal. I don't get caught up in any of that noise. I'm not interested in catching a few pips. I want thousands of pips. I want compound growth. I want to do it safely. I want to do it consistently. I don't want to have to be staring at my screen. I want it adapted around my lifestyle. So when I first started trading, I'm a full-time trader. I've been full-time for about 6 years. When I started trading full-time, when I first started trading, I was working as a photographer, an English teacher. I was doing like 2 or 3 jobs. You need a style of trading that adapts around what you do. Day trading can make you a bit of money, but you're compromising time for money. Okay, and if it's not time, then it's usually something else, like you're risking too much because your account size is not large enough for you to be trading in the first place. There's all of these things that people need to really get correct in their head before they actually approach the market. Right, let's move on. That's the New Zealand dollar. So going back to sort of summarize this up, a break below here will be an entry point. A break and close below here, this is where I will compound and I'll add further position. And if you're not in this, this is where you can enter and you want to see price to move towards 0.6. That's a distance of 500 pips. Okay, let's go to the pound Aussie dollar. All right, pound Aussie dollar, start with the monthly time frame. Long-term trend is bullish. It's trading above the major figure 2. It's above the round number 2.10. Long-term, I would like to see price move towards 2.5 and even 3. And it's been that high before. So there's always a good chance that can happen. We're not guaranteed it, but there's a good chance. And how am I gonna measure the movements along the way? I'm going to use the round number. So now that price is above 2.1, I want it to move towards 2.2. It's got to clear this resistance and move towards 2.3, 2.4, 2.5. That is how I'm looking at the trend. Weekly time frame, trading above the weekly 200 moving average. Bias is bullish. Trend filter is green. Trend is bullish. Daily time frame, trading above the daily 200 moving average. Trend bias is bullish. Trend filter is very much green. Now I have positions running since price broke and closed above this level. So since price broke and closed above the figure 2 and gave me confirmation of the trend, you can see how these are now in good profit. Okay, we had a bit of weakness to the downside. That was across the board on the Aussie dollar. It doesn't matter. This is part and parcel of price action. All it's done is come back to 2.1. This is now acting as a support level. We'd now like to see strength back to the upside. A break and a close above this level will give me an opportunity to compound further. If you're not in this trend, a break and close above here will give you an entry point. Now, of course, reversal traders, intraday traders, they'll have a different approach. For me, it's not the way I do it. I have multiple positions. This trend has moved 200, 400, 600, 800, 1,000. Okay, let's say 1,200 pips. It had moved before. It's moved 1,200 pips. I have multiple positions with multiple lot that equates to thousands of pips. So I'm very healthy in profit, and this is only the start of the trend. Okay, so pound Aussie dollar, a break and close above here will give me a compounding opportunity, and whoever is not in this, if you are in this, also compounding opportunity. If you're not, an opportunity to enter in terms of trend trading. Okay. Okay, I've got a question coming through from Adi. Let me just have a look at that. If you have several positions open, do you set the same stop loss values for all of them? Yeah, it's a good question. I use a trailing stop loss. And so the way I manage my stops is to keep things very simple. And so, yes, I tend to use the same stop loss level. Okay, I'm going to enter at different levels, but I'm going to manage pretty much consistently along the across the board. Guys, I use a very wide stop loss. And this is something that you need to embrace. If you have the ATR, average true range, if you have the ATR at 90 or 100 pips a day, and you have a stop loss of 20 or 30 or 40 pips, there is a very good chance that you're going to get stopped out. You need to look at the average true range of a currency and use that to dictate your stop loss. So if your average true range is 90 pips, you need to have a stop loss bigger than 90 pips. Guys, do you guys understand what I'm saying here regarding stop losses? Can I get a quick thumbs up? Now, you don't have to agree with me, and that's fine. You may be a day trader, in which case you have a different approach, okay? But if you want compound growth, if you want to achieve consistent money, you've got to change your approach. Wide stop losses are essential. Getting in and out, in and out, in and out is not going to make you consistent growth, because every time you have a winner, your losers are going to cancel out your profit. What you want is consistent profit. Now, something that someone's just asked me is, do I ever have losers? Yes, I have losers. I'll show you a loser that I got caught up in. And it wasn't a currency, it was a stock. So I don't know if you guys have seen what's been happening to Apple. Okay, Apple is now in pretty much a bear market. I entered this stock in February. So we can see, going back here, when price broke out of this consolidation, this is when I started entering. And my position was in good profit. Since then, it went into consolidation. And since then, it stopped me out. How much of my account, my stock account, now guys, remember, my FX account and my stocks account, they're completely separate. I have multiple accounts. I have multiple accounts for FX. I have multiple accounts for stocks. How much do you think I risk per trade whenever I open a position as a percentage? Okay, thank you, Adi. Yes, the correct answer is never more than 2%. Okay, now, so this was a losing trade. Okay, I lost 2% on this particular trade. Now, let's go to CVS. Okay, now I'm going to go to the monthly chart. If we have a look at CVS, do you think the profit that I am making on CVS is covering the loss that I made on Apple? Can I get a yes or a no? Anyway, any suggestions, guys? Yes or no? Do you think, right. Thank you. Okay. If I entered on a breakout above 60, which is where my positions have been running from, my positions have been running from 60, do you think I have made good profit along this trend that covers the 2% loss that I've made on Apple? The answer is yes. See, the thing is, you cannot eliminate losers. Losses are part and parcel of trading. The one thing that we are certain about in trading, the one thing that we know is the uncertainty of the future. Nothing is certain. What people want when they first come into trading, especially when they open a position, is instant gratification. Hey, I'm in the market, give me profit. The market doesn't owe you anything. Just because you've been, you've opened up a broker account and you've put money into it and you're using some kind of software, doesn't mean the profit owes you anything. The market owes you anything. It doesn't. This is why you always want to keep your risk small. When you are in a winning position, you then compound, because that is how you cover your losses. Losses are small and capped. My returns are large and uncapped. People who blow their accounts have the complete reverse. They have uncapped losses and they have capped profit. As soon as they make any kind of profit, they take it. Fear of losing it. As soon as they get into a losing position, they hold on, and some of them even add to losing positions because they're looking to cover their losses. It's a very, very, very difficult, unnecessary, risky, and dangerous way of trading. And that is why people blow accounts and lose a lot of money. Okay, so to answer your question, I have losses. But remember, my losses are always, always small. They're capped and never more than 2%. Okay, going back to what we were talking about, which were the currencies, pound, Canadian dollar. I've only got about 8 minutes left, so I'm going to quickly go through the ones that I wanted to go through. Bull trend. Very clearly, market is up. Price is trading above the figure 2. Long term, I would like to see price move towards 2.5, being a half figure. I'm going to use the round numbers as incremental stages, 2.1, 2.2, 2.3, 2.4, 2.5. Weekly time frame, price is trading above the weekly 200 moving average, trend filter is green. Daily time frame, price is trading above the daily 200 moving average, trend filter is green. Okay, now look at what's happening. Not a lot of momentum to the upside because it's summer, but it is slowly creeping up. Okay, and that is the direction that you want to be trading in. So the pound Canadian dollar, wait for further confirmation, wait for a breakout, take the trade. This is one that's on my watch list. And finally, we'll look at the pound New Zealand dollar. And actually, we'll go to the euro pound as well. Okay, pound New Zealand dollar. Long-term trend is bullish. Okay, we've seen that since price broke out of this consolidation, it's moved very quickly. It has got this resistance level here, which it's struggling with. But if it clears that, we'd like it to go towards 2.5. Long-term target is 3. Weekly time frame, trading above the weekly 200 moving average, trend filter is green. Daily time frame, trading above the daily 200 moving average, trend filter is green. Now again, look at that correction. Again, there was a lot of talk on social media. Trend is reversing. People were panicking. I simply said, hold, wait, hold, wait. Everything is suggesting further strength. This is simply a correction. Well, downside, price support back to the upside, and we're now seeing further strength. A break of this level, so let me get my support and resistance tool. A break of this level here will mean a continuation. I have positions running since price broke 2.10. So I've got compound positions running since price broke 2.10. A break and a close above here will give me an opportunity to add further positions. So I'll accelerate the compound process. If you're not in this, this will give you an entry point. But remember, 2.5 will act as resistance. We're currently it's finding resistance at 2.4. And you can see how it's reacting to a round number. But this is a weak round number compared to 2.5, which is the figure. So if it breaks this, you've got 1,000 pips to 2.5. Okay, guys, I think... Oh, excuse me. I wanted to look at the euro pound. Now, guys, notice. Have you noticed the currencies I looked at? Aussie dollar, US dollar, New Zealand dollar, US dollar. Correlated. Now I've gone through the pound Aussie dollar, the pound New Zealand dollar, the pound Canadian dollar, and now also the euro pound. All of them are pound currencies. Right, if we look at what's happening, we've got weakness to the downside. Price struggled to break through 0.7, but we've got weakness to the downside now. If it clears this, we'd like to see price move towards 0.6. It needs to clear this support level here, which is around 0.6, but ideally we'd like to see price move towards 0.6. Okay, on the daily time frame, weekly time frame, price is trading below the weekly 200 moving average and the trend filter is red. And on the daily time frame, price is trading below the daily 200 moving average and the trend filter is red. Okay, you can see went through consolidation. Now this is a very good example. If I look at the euro pound, okay, if I just draw the support level, price broke out, price broke, didn't close, fake breakout, went back in. So whoever went in intraday would have got burnt. We then had a confirmation of a breakout. However, it was the first breakout. So after a lengthy period of consolidation like this, after a lengthy period of consolidation, looking at 1, 2, 3, 4, 5 months of consolidation, the first breakout ended up being a fake breakout. So whoever went in aggressive, most likely, if their stops weren't wide enough, would have got eaten. Now price is coming back down again. The next breakout is where we are likely to see a trend continuation. This is not guaranteed, but you've got a good chance after the first breakout fails. Okay, so a break and close below here will give an opportunity to enter further position. We're trading below 0.70, so we'd then like to see price move towards 0.60. Okay, right, aren't you risking more than 2% with so many pound pairs? Okay, the thing is, when you're risking so many, when there's so many currencies moving, you don't need to be trading all of them. You choose the best pairs and you compound accordingly. So I'm not exposed on the pound Canadian dollar yet. That's on my watch list. I've got positions running on the pound Aussie dollar and the pound New Zealand dollar. I've got positions running on the Aussie dollar, US dollar, and New Zealand dollar, US dollar. That's my portfolio at the moment. I don't have any other positions running. As the pound Aussie dollar and the pound New Zealand dollar start returning me good profit, I will then start adding on the pound Canadian dollar. It's all about understanding trends, having good portfolio management, and having good risk management. Please give Instagram link that works as previous to blank pages. Okay. Yep, guys, if you guys are on Instagram, please follow me on Instagram. This is my Instagram, by the way. So I update it a lot and I give a lot of hints and tips on trading, the advantage of trend trading over day trading. You know, I put up charts and analysis. There's a lot of stuff on here. Okay, so that is my Instagram link. My name on Instagram is fx.mentor. I don't just talk about FX, I talk about stocks as well, but everyone's hyped about FX, so it just makes my search, makes me more searchable under FX. Okay, I think we've got 2 minutes left. If there are not any other questions, I will call it time on the webinar. Are there any final questions, please? And I hope that made sense. Did that make sense, guys? Can I get a quick thumbs up that you guys understood what I'm waiting for? as a trend trader, this is simple, it's straightforward. It's highly profitable, it's stress-free, it's consistent, it can be adapted around any lifestyle. It's very, very, very powerful. Trend trading is the way forward. Okay, if you guys have any questions, you're welcome, Adi. Zaheer at TDT. I'm just writing my email. Okay, Zaheer at tdtpro.com. That is my email. Okay, feel free to hook me up via email. If you've got any questions about the software that I use, the training that we have here at Dynamic Trader, if you want to join the community and be able to trend trade, by all means get in touch and we'll take things from there. Okay, have a great day, guys. I think that's it in terms of questions. I think I've answered all of them. Do you only use? Yes, I do. I only use monthly, weekly, daily. Yeah, I think I've answered all the questions. Okay. Brilliant, guys. Thank you very much. Thank you for your time. Have a great day and great evening, morning, wherever you may be in the world. And I will see you on next month's webinar. Guys, remember, NFP out on Friday. Stay out of the market. Be smart. Take care. Bye-bye.